I'd love to share my slide.
Hello, doctor.
Because,
Good afternoon, sir. You can share your screen.
yes, I can share it now. Oh, great. So just give me, thank you very much. Okay, guys. Oh, great. Thank you. Thank you. Okay, let's can you see it? Yep. All right. Okay.
Yes.
So I have this. So I have this, which explain the triangle of governance risk and compliance, and the organization itself, which we can see in the middle, is we have some triggers that influence the environment or that triggers certain risk. One of them is the rapid technological advancements. We can't stop it. Nobody can stop it. Each time it comes up, something happens within the system. Trigger a risk. It triggers some consciousness. And the same thing with the above regulations, which is actually aimed to address the risks that are coming from those changes in technology and advancement of AI. So regulators have to put this in place and make sure that the operators stay within the line and they do not in any way expose the stakeholders' interests in the system. And there are also environmental and governance issues as well, which also is a factor outside the organization, and it also triggers some risk which will be of concern for GRC. Then changing societal behaviors is another one. So we have the triangle of governance, risk, compliance. That has to be a kind of protective layer to the system. And so what are the influencers of GRC? A number of them that have been able to identify: the digital transformation and automation, and is where that's going to promote increased reliance on AI, machine learning, and automation for real-time risk detection, compliance, monitoring, and decision making. We also look at integrated and agile GRC framework, which is also is a factor that being influenced, from the development of AI and the advancement in digital technology. So we expect that GRC of the future to regulatory changes, just like we have seen the case of Central Bank of Nigeria, being proactive in their regulations. It's also see the issue of regulatory technology too, and that would be adoption of regulatory technology solutions to automate compliance tasks, reporting and auditing. So there's going to be a kind of real-time reporting on issue of compliance. Cybersecurity and privacy is another issue that will influence GRC. And we expect that cyber risk in the future will be a major concern for the strategy. It also lead to data privacy compliance, which become a significant concern for institutions. So what are the future crimes that we should be expecting from the advancement of AI and the digital technology? What are we going to be contending with in the near future? And I'm going to take a report from Frank McNeil, who says that what I did with my youths is harder or tough and easier today. Technology crimes. So he's talked about that advanced technology as good as made us to be so little crimes. I would have hopefully this one have made this for you. Now, this video, when it was posted, I had so many reactions. People were saying, "Oh, where are the other people? Is this only these two people? Are they the only people that survived this flood? Oh, why was she and the baby left alone? Oh, who is the cameraman that was taking the shots?" People were expressing all kinds of emotions. But some people ask questions. This is AI generated. So there is a misinformation outside there that will create anxiety for people. So according to about testing, technology progress is like an art in the hands of an pathological, incorrigible criminal. And we can see how AI is being deployed in a very negative way. And this is one of the crimes that we have to contend with now and in the future. So the future crimes that we'll be expecting is that there will be high cybercrime, more sophisticated ransomware and malware, target attacks, intentional use of AI for misinformation, fake videos, increased cyber espionage, and state-sponsored attacks on critical infrastructure. We're going to experience more financial crimes, increase in cryptocurrency and digital asset frauds, use of advanced algorithms and code to manipulate market information and insider trading. We're going to experience more of identity theft and privacy violation. We're going to experience increase in supply chain and Internet of Things related crimes. This will occur more and more. Back security and back tech threats will support. There will be back hacking, there will be misuse of gene editing, biological terrorism. All this will occur in the near future in a very alarming way. So what are the risk management strategies we need to look at to get our organization secure, against all these advancements that comes with with some challenges. One is that we need to leverage leverage on advanced strategies. We need to use artificial intelligence, which also is a problem on its own, but there has to be a way to find the solution. So it comes with both challenges and also we have to deploy it to also find solutions. So we need to make use of artificial intelligence, machine learning to detect anomalies, reduce risk, and to make compliance monitoring. We also need to implement big data analytics to identify patterns, assess vulnerabilities, and improve decision making. We also need to invest more in cybersecurity tools, e.g., example is the intrusion detectors, the biometric authentication. We need to do more of this so that in real time we will be able to, contain whatever attacks or breaches that these advancements in technology may involve on the system. Finally, we need to implement a dynamic GRC framework, develop a united GRC platform that aligns risk management. We need to imbibe a real-time and continuous monitoring of risk and compliance status. We also need to develop policies that adapt quickly to new regulations, technology advancement. So going back to the CBN, Central Bank of Nigeria circular, for a proactive organization, they ought not to wait for the Central Bank of Nigeria to issue that special draft, the mandate for real-time compliance. They ought to have been able to put that into their system like about 12 months ago. And this is what makes risk management, to give value to a system. Thirdly, we need to foster a strong ethical culture, regular training, awareness on cybersecurity, data privacy, and ethical conduct for all the employees is very necessary. Leadership commitment to GRC initiative, we cannot negotiate that. It is a necessity that we must for our organization to be secured against the future. To stay ahead of regulatory changes, we need to go to date with evolving laws, standard and industry best practices. And I think for me, this is the way out. So for us in Africa, and especially here in Nigeria, we need not to wait till our regulators, advise us on areas of compliance. Rather, we need to imbibe one global best practice to bring it into a system even before the regulators decide to make a decision on that. So we need to make use of more automated tools to ensure timely compliance and reduce manual errors. Then enhance crime prevention measures. How can we do that? As a strategy, we have to be proactive in surveillance by using AI, which in itself has been a problem for another system to detect suspicious activities much more early. We need to implement strict controls on access to sensitive data and system that privacy negotiable and with AI. I got access to our data. So we need to be very proactive in ensuring that data in our custody are better secure. We need to build resilience and crisis management capabilities, and this will require us conducting regularly risk assessment and simulation, to test response plans. We need to develop and update plans to ensure operational resilience during disruptions. So in conclusion, the future of governance risk compliance for us with approach with the aim to manage very complex, rapidly evolving risk. The future crimes become more sophisticated. We have to leverage more on emerging technologies, the AI, the blockchain, the Internet of Things, which I see come, with their own challenges, but we still need to make use of them to solve the same challenges that they bring along. So we need to stay vigilant and adapt security and compliance strategies that will help us to tame the challenges, that can be associated with this advancement in technology and artificial intelligence. So my closing word to be that yesterday's strategies may be inadequate for today's risk. So we need to keep thinking. We need to keep being ahead of time. We need to be ahead of regulators. We need to be ahead of those that are out there to make use of AI and other digital technology for negative enterprises that pose risk to our system. So on this note, I want to say a very big thank you to you. Thank you.
Thank you, Dr. Roseni, for the presentation. As I mentioned earlier, if you have any questions for the speakers, you can drop them on the LinkedIn page of the GRC and FinCrime Prevention Mid-Year Summit and the GRC FinCrime Awards. So please feel free to drop those questions there, and Dr. Roseni, I'm sure, will be happy to cover those and engage in discussion, etc. I don't think Loretta Joseph is with us yet, so I'm going to proceed and call our third keynote speaker to the stage, Dr. Thomas Wan-CK. Thomas will be talking to us about AI-powered financial crime prevention, leveraging technology to build smarter and safer systems. Thomas, I think you have some slides too. If you have slides, feel free to share them now. Dr. Roseni, you can stop sharing your screen. There we go. Perfect. Excellent. The stage is all yours, Thomas.
All right. Thank you very much, Matthew. So, ladies and gentlemen, good afternoon, good evening, or even good morning, depending on where you are. Now, as what Matthew has mentioned, I'll be taking you on this topic about AI-powered financial crime compliance and how we can better leverage technology to help us to build To give an introduction about me, myself, as you can see here in my profile, I actually come across as a blend between an industry practitioner as well as an academic. And right now, currently, I'm the adjunct fellow with the Singapore University of Technology and Design. I'm also the general manager who's in charge of education in the Blockchain Association of Singapore. And of course, I'm also with the International Compliance Association that's based in the UK. I'm a fellow member of them, and I'm also their consultant. Right? Now, but okay, today's session is not so much about me, but rather about you. Now, so, right, so what do I have in mind to cover with you guys with 15 minutes session? Now, first and foremost, further, I would like all of you to maybe take out your mobile phone, all right, to do a quick scan of the QR code. Reason being, in all my seminars, webinars, workshops, etc. Now, I always like things to be two-way. I like to interact with the audience and so on, rather than you sitting there over the other end and just receiving a lot of info and stuff like that, right? Now, so if you can, kindly pick up your mobile phone, scan the QR code. This would lead you to what us point at. It's a very fun, interactive tool to use. Okay, and you'll be for today's session will be 38152. Okay, so I've shared the class code in the chat. All right, now so please spend 30 seconds or a minute to try to log in. All right, it will be very fun, trust me. Okay, now so what I have in mind to cover with all of you. Well, first and foremost, we'll take a look to understand how KYC CDD process as well as transaction monitoring processes are being kind of done traditionally or currently, right? But then again, we also do a comparison to help us better understand with the digitalization of real-time payment systems now. So how this might change in the way that we actually conduct what we call eKYC or electronic KYC, as well as transaction monitoring. Okay, now, and then moving on, to kind of understand why we need to change, or why we need to move away from the traditional approach to adopt new technologies to help us to better do our KYC and transaction monitoring work. All right, and this is largely driven by the digitalization that we've seen, especially in the aftermath or even during the COVID pandemic, and this has been expedited somewhat. Now, then of course, the third point, we'll take a step back again to help us to better envisage, to see what are some of the issues and limitations with the traditional KYC approach. And then moving on from there, point number 4, of course, to explore, to see how new technologies like blockchain and AI can actually help all these limitation, time spots, etc. when it comes to doing KYC transaction monitoring work. All right? Now, that I have for all of you in this short session. Now, so okay, without further ado, let's get ourselves warm up. Okay, now, so let's try to start on a very light-hearted note. First, I would like all of you here to tell me, based on your understanding, what do the terms KYC and CDD would mean to you? Okay, now let's try to be a little bit cheeky over here. I want you all to try to come up or conjure up some of these funny annotation or meaning that you might have heard of or that you might have come across. Okay, now, so what I'm going to do, I'm going to launch the Passport app. Okay, now, so yeah, all you need to do is just to scan the QR code. All right, okay, and what are some of you? Okay, I'll give you guys a minute, a minute and a half or 2 minutes. Okay, due to the time constraint. All right. Okay, I want to see how innovative or creative the audience you guys are. Okay. Wonderful. Now we got answers coming through. Okay. Maybe I'll give 30 seconds more in the interest of time. So for those of you, if you haven't shared your thoughts, please do so already. All right. Okay. chat later on with everyone, all right? Alrighty, time's up. And thank you so much, ladies and gentlemen, for your kind responses. Now, so let's, Now, I'm not going to go through all of them, but here, when I was the country head of compliance, one of the to the two terms, the first one, KYC, to some people, especially the business folks, they will call it what? Hearing your customer. All right? They say, hey, come on, compliance, why are you guys attacking customer? And trying to onboard the customer, you get the account open, start to do business. You're asking us to fill up 10 pages of forms. Are you crazy or what? That they will say. All right? They're deterring me from doing business. Now, having said all this, you will also come to realize it actually speaks volumes about perhaps some of the mindset, the cultural mindset people have with regards to the importance of doing KYC CDD work, but also it also speaks volume about some of the challenges, the difficulties in practice, right? When doing KYC CDD work, right? Okay, now I'm sure you guys will have similar experiences, all right? And well, some of you have also obviously come up with very innovative suggestions, all right? Okay, now, so here, up next, I'm sure this workflow or process would look very familiar with all of you, all right? Now, so this is how traditional KYC CDD is usually being done, right? During client onboarding and so on. Now, but with the rapid digitalization of financial services, as well as the emergence of real-time payment these days, all right? Now, this process or workflow has somewhat changed. Okay, so gone are the days where we will maybe take about a week or even 2 weeks. I've heard in the industry to sort of verify the customer's info, ID, etc. Right now, but with all this digital internet mobile banking, we can't tell the customer, hey, okay, you have submitted all your documents, fine. Now, please hold on 2 weeks, right? We'll get back to you. You can't do that with mobile banking or internet banking, right? Now, so here you find that when it comes to all these IDMV, identification and verification work, now, so very often with mobile internet banking, so what we try to do is what? To accept the customers very quickly, right? This is contrary to the traditional approach. Okay, now, so we will do some preliminary client risk profiling, and then, okay, we would here, right, encourage the customer to transact quickly so that we can actually sort of build up a history of the customer transaction rather quickly and do a look back to see whether the transaction, are they in line with the initial file that we have came up with, all right? Now, with the advancement of technology, you also realize that rather than doing things like your periodic KYC review, show KYC or data profiling, very often based on some of these events triggered, right? Okay, I won't really go through that. I'm sure you guys know what are some of the key events triggered, right? Now, so this, ladies and gentlemen, I hope can give you a very high level organization of financial services. Now, how the sort of traditional process of KYC and the transaction monitoring has somewhat changed, all right? Now, so, yeah, with all these real-time payments, with things like ISO 20022, SWIFT, etc. Now, so we are in an era of, almost like T+0, a kind of a payment and settlement system these days, all right? Okay, now, so there's a demand first thing, right? Yeah. Now, so as a result, you realize that, we need to do our onboarding very quickly to set up the initial client risk profile and then start to risk rate the client, all right? Now, you also find with digital onboarding, the second row over here. Now, so gone are the days where people have to go physically down to the branches to open an account. All they need to do is to submit the documents, right? Okay, or give access to the digital ID and so on, right? Now, so with all these things, it actually generates additional data, and we are living in the world of sort of big data these days, right? Okay, now, and then of course, with things like crypto, fiat to cryptos, digital assets conversion picking up these days, this has also given rise to some of the complexity. Sometimes when you're dealing with some of these clients who might have a nexus to some of these crypto assets payments, right? So it further convolutes to the picture, right? Okay, and of course, last but not least, you find that with internet mobile banking, you can move money seamlessly across border very easily. All right. Okay, now, but out there in the industry, the fourth row over here, you find that there's a lot of fintech company these days. You might have heard about some of these names like Jumio, or even Napier AI, Thomson Reuters, etc., etc. Okay. But the thing here is effort to link up our core banking or core payment systems with their application or their transaction monitoring, KYC software, etc. Right? So we need to, right? Okay, now, and of course, regulatory pressure, because irregardless whether traditional or e-KYC, we have to still comply with the regulatory requirements, all right? Okay, despite doing things more quickly. Okay, now, so as a result, we also realize that leading regulators in the world, like the Singapore Monetary Authority, the Hong Kong Monetary Authority, etc., now they have been advocating that banks and FI, telling them, hey guys, you got to work much smarter, right? You have to adopt all these new technologies like AI, blockchain, to help you to improve on your system. Okay, now, so what might be wrong, and what might be some of the limitations with the traditional approach? Most, you realize that KYC by itself is what we call a risk-based approach. Regulators have been advocating that, right? And here you find that bodies should be familiar with all of you. So according to FATF, they will tell you, so these are the following risk factors: geographic, products, customer, channel, transaction, etc. Right? Now, but by and large, okay, all these risk factors, in the context of the risk-based approach, they are what we call principle-based kind of approach, which in other words are subjected to interpretation. Okay, now, so what do I mean by all this? So, once again, another quick quote. All right. Now, so I'm sure that all of you in your firms, you have your KYC forms, correct enough? Right? Now, so what I want you to do is tell me, if you were to print out your firm's IC form, how many pages of A4 are there? Alright? Now, so I'm gonna once again pull out the passport app and the note, the class code is 38152 to join. Okay, just give me a number. Is it 3 page, 5 pages, or what? Is it customers deterrence documentation? Like what some has claimed. Okay, let's hear from you. Give me a number, guys. All right. I want to see who's the champion over here. Okay, no worries. There's nothing secretive. Okay, just share with me. The number. Okay, in the interest of time, I'll probably give you guys about a minute or so to share you. All right.
Hi, Thomas, just also so we can keep the tight schedule here, we have a few more minutes left in your presentation, so 3-4 minutes more. And then, then we have to move on to the next person, just so you're aware.
Okay, sure, thank you. Okay, now, so I guess I have to wrap the results up very quickly. Okay, now, here, it's not about the numbers, but what I'm trying to drive is that what you see in your KYC form, by and large, depends on the way that your firm or your compliance has actually integrated all these risk factors under a risk-based approach. Now, for info, in Asia Pacific, when I ask my class a similar question, the answer ranges from 2 page to 32 pages for institutional client. All right. Okay. Now there are individual customers as well as institutional client. So the company. Okay. Now, so here you also realize these days, because people have to submit various documents, electronic documents online and all that. Now, so there's concern about some of the the validity of some of these documents. Well, with AI especially these days, and also in the dark net, you can find crime available for sale. So you have fake IDs and all that using AI. Now, so one concern is of course over the security of some of those genuinity of those documents. Now here, you find that that's where new technologies like blockchain can actually help us, right? Okay. Now, in the interest of time, I won't really be going through each and every point, but you realize that blockchain technology is what we call immutable records, okay, which is in other words tamper-proof. All right. So this can actually help us to overcome some of these document submission issues and so on. All right. Okay. Now, next thing, transaction monitoring. You use things. You use software systems like Optimize, Critical a lot of many names in the market. Now, but here, regardless of which vendor system that you're using when it comes to transaction monitoring, your TM system is only as good as the number as well as the type of rules and scenarios that you put in. Okay, now, in the interest of time, okay, I won't be conducting this poll, but just to very quickly share with you guys, when I ask this question, again, in Asia Pacific, the answer ranges from 3 to 200, to more than 200. Okay, right? Now, but here, bear in mind, your system is only as good as what you put in. all transaction monitoring systems, they are just like search engines, all right? Okay, now, so these are some examples. You find that with rules, they are what I call one-dimensional. Like, for example, if the transaction is more than 10,000, that's one-dimensional. With scenario, I would call them two-dimensional. Okay, usually they have a logic then they're built in. Like, for example, if the account has been sort of dormant for more than 6 months, and then suddenly you have an amount, let's say, is coming in more than 1,000, well, that's a red flag. Now, but one-dimensional, two-dimensional, it doesn't really help us, okay, to do what is very important in transaction monitoring, what I would call the 3 R's. To be able to pick up the relevant or related transaction between related accounts and related parties, the 3 R. Now, overcome this, okay, find an AI can add the third dimension to things. All right? Now,
one more minute, Thomas. We ran out of time.
Okay, yeah, I'm wrapping up. Last 2 slides. Now, so as you can see here, to overcome some of these current limitations as well as issues, challenges in KYC transaction monitoring work, new technologies like AI, blockchain, or even things like API, cloud, biometrics, etc. Now, they can actually help us to further sort of make our system much smarter and to future-proof them. All right. Okay. Now, final slide here, Matthew. So here you also realize that, this rapid digital era that we're living in, KYC can no longer be a one-off kind of thing, right? It should be what we call perpetual or continuous and dynamic nature, right? Now, likewise, when it comes to transaction monitoring, because all your rules, all your scenarios, they are just reactive, right? You, like for example, many of these rules, scenarios, they are being based on the typologies that's been published by the financial intelligence units or the regulator. So we are very reactive. Okay, now, but with AI, this can actually help us to become predictive. Okay, now, so as a result, my parting words is that yes, we do need to sort of expedite the adoption of AI, blockchain, and maybe to integrate our system with some of these new technologies, right? And to build robustness and governance over them, so that we can actually future-proof financial crime compliance efforts. Okay, on that note, that's all I have for everyone. Thank you very much, Matthew.
Thank you, Thomas. And next time we'll try to get you a full hour so we can go through all the questions and all the polls and all the activities that you have planned for us. Unfortunately, as I mentioned, we are on a tight schedule. So thank you for that. Very, very full talk. So everyone, any questions you might have for Thomas, just jot them down on LinkedIn. Also, if any of you want to connect with any of our speakers on LinkedIn and have the discussion on a private level, feel free to do that too. Let me call up our, I see that Lorenzo is not here yet from the list. So let me call up our fourth keynote speaker, Dr. Nicola Harding, who's going to be presenting on a global perspective on financial crime prevention, navigating the complex web of regulations and compliance. Nicola, the stage is all yours.
Can I have permission to share my slides, if that's all right?
Yes, you can. Whatever works best for you.
It says only presenters can be made a presenter.
Can we make Nicola a presenter, please? So that she can share the slides.
Oh, thank you very much. I think it's working now.
Perfect.
So hopefully everyone can see okay. So thank you so much for having me. I've been listening in the background and it's been really, really interesting. So thank you. Yeah, my name is Dr. Nicola Harding. I'm a criminologist and I'm also the CEO of a company called We Fight Fraud. We're a little bit of a unique consultancy here in the UK, although we operate globally, in that we were founded by a former fraudster, a former head of police, a filmmaker, and then I joined shortly afterwards, and obviously being an academic. Over the last 8 years, we've really developed into quite a bespoke consultancy. So we work with financial institutions, we work across critical infrastructure, essentially everywhere that fraud and financial crime is, we tend to have a hand in. And that goes across different jurisdictions. So I work internationally, much more so in Europe these days, but definitely over to the US as well, and with a little bit of South America. So hopefully I can give you some insight here today, at least from a UK perspective, looking outward, hopefully. So just to kind of, that's who I am. I wanted to think firstly on this kind of global perspective about the challenge that we're all facing, because I think that we can become, very siloed into our individual issues and the things that are happening within our region or within our business, within our department even. But the challenge is the same across the field for all of us really. Is that we're facing increasingly stringent regulations. So here in the UK, we've had regulations around APP fraud, so authorised push payment fraud, recently in October last year, which has caused really significant challenges for UK banks. Because ultimately that's a regulation that's happening to try and solve the problem only within the UK. It's actually potentially causing a lot more problems, but I'll get into that a little bit later on. But we've got the agility. This is balanced against the agility of these transnational organised criminals. And I think who we think those criminals are and what they look like has changed over time. We may have thought that we could spot a scam, from the emails that we get, or from a foreign voice on the phone. We may have thought that actually those international boundaries cause an ability for us to identify that something might be criminal, particularly if you're the person at home. But actually with increasing technology, increasing communication flows, globalization, means that actually there's very little friction for these criminals now. In fact, everything that helps make us a global marketplace for trade, that helps logistically moving people, products, is all playing into the hands of criminals as well. What we do need to be able to combat this from a global perspective is a unified yet culturally sensitive approach to financial crime prevention. And what I mean by that is that we can't have a one-size-fits-all solution. Ultimately, there isn't a one-size-fits-all solution. What there is a trend of doing is taking policy and regulation from one zone and say, there, let's move that across to somewhere else, and it should therefore work there. And criminologists, I can tell you that is not unique to fraud and financial crime. That is something that happens across policy and social policy the world over in every area, whether that be healthcare, whether it be education, or whether it be crime prevention and detection, is that we will say, oh, that's a good case study. It worked in the UK, therefore it must work in France, it must work in Chile. And the reality of it is that whilst we're all people, we've got different cultural sensitivities, we've got different political structures, and we've got different challenges geographically, economically, that have to be taken into consideration. So a one-size-fits-all situation is not going to help. But that doesn't mean that we can't learn from each other. So the size and scope of the problem, I'm probably preaching to the converted really, so I won't go into this. And obviously, when it comes to financial crime, what we do know is what we're able to detect and what we're able to account for that we see as criminal is just the iceberg. We know that the estimated 3.1 trillion in illicit funds that's flowed through the global financial system in 2023 alone is a best guess. And that's because the majority of our fraud and financial crime goes undetected. Here in the UK, we reckon that only about 14% of financial crime is ever detected by the financial institutions, leading to already very swollen fraud figures here. For example, in the UK, fraud and financial crime accounts for 40% of all recorded crime now here and is considered an issue for national security. But we know that globally, fraud and scams and bank fraud schemes have accounted for approximately 485.6 billion losses globally. Like I say, it's just what we've been able to detect, and the majority of it does go either underreported or unreported or undetected. And that's just because of the challenges that we've got. Again, coming back to this transnational kind of issues, criminals are able to collaborate, communicate, cooperate far better than what we can because they simply don't have the red tape that we have. They don't have, the policies such as GDPR and data protection to be able to share that data. And they often have a shared goal. There's a saying of the enemy of my enemy is my friend. When it comes to criminals, whilst they are in conflict with each other often, they can find ways to collaborate with each other really effectively when there is enough money on the table. It's only when there really comes to conflict over scarcity of resources that we see criminals in conflict with each other, and that can be over geographical areas. There can be conflict because that's one of their resources, or financial accounts, things like that. But generally, they will communicate and work together in ways that simply we can't because of the political and policy red tape that we have to cut through. So one of the challenges is this regulatory fragmentation versus criminal integration. So the fact that we have regulatory silos, so even when we do our training as fraud and financial crime detectors, investigators or preventers, we are dealing with things like counter-terrorist financing, we are anti-money laundering experts, we're fraud experts. All of those things are siloed into categories, then those categories may be within your organisation. I often go into banks and financial institutions to work as a consultant, and sometimes the first time that the fraud team has spoken to the product team, spoken to the anti-money laundering team, has spoken to the cybersecurity team, have been the first time that they've been in the room is when they all come together to speak to me. And for me, that's very strange because they should all be each other's best friends within the organisation. Those communication flows should be really, really tight. They shouldn't be siloed in those ways, but that is one of the challenges. We then find that regulatory frameworks are often siloed nationally, so criminals networks are able to seamlessly operate across borders. Now, I wouldn't say it would necessarily seamlessly operate across borders, but the information flows across borders in ways that we can't really fully get at. A case study of this and around this kind of culturally sensitive approach to how criminal activity occurs and the regulatory fragmentation is the phantom cattle investment fraud in Uruguay that exploited local trust in cattle investments. This led to a £350 million loss, and this demonstrates how cultural contexts can be manipulated. So you wouldn't necessarily be able to pull off that type of fraud and scam in the UK, for example. What happened there is that there was a cultural understanding of how cattle markets can be, invested in and offer returns but with very little kind of proof of having to, who is the cattle that's owned, what actually looks like, and where they actually are. So that was built here was that the firms that were and ended up ultimately being under investigation for this. There was a trust put in those, but it was within the cultural context of Uruguay itself. Now, what we see when it comes to how these things won't become siloed, but how we can work together and think about the different silos, less as around anti-money laundering or counter-terrorist financing or fraud and financial crime or cyber security. I'd ask you to think about them in a slightly different way. And for this, I want you to think about the 4 pillars of prevention. So across any of those different industry silos, whether you work in financial crime, whether you're in the financial crime team, whether you're an MLRO, whether you are a product designer working in a fintech, or maybe you are part of the, or working alongside your comms team within a financial institution dealing with your customers, is that fraud prevention needs to cut across policy, process, your products, and your people. And I'll go into that and explain a little bit more what I mean by that now. Essentially, within your policies within organisations, so this can happen on a macro level, so on a nation state level. It can be international policy that cuts across borders where we've got international cooperation, and it can come right down to your internal policies and processes within your organisation. But these need to be developed in culturally grounded policies that address local nuances. So we need to have, yes, the overall effect of how are these different teams going to work together, what does it mean on a global scale, what does it mean on a national scale, but also how does this impact on the ground? What kinds of challenges are your local teams having to deal with, particularly if you're in an organisation that deals with different geographical regions, is that knowing that your policies are not going to be able to, even if they can work across all those different geographical boundaries, they're not going to work in the same way across all of those geographical boundaries. So prevention needs to be put into policy that's developed in this kind of culturally grounded way. Then we need to think about processes. So this is here implementing processes that prioritise fraud prevention as a competitive advantage. And this is something that I preach enough really, is that often when it comes to compliance, it's seen as, but you're adding friction into the process. But this is going to cost us more money. Ultimately, and the UK is a really good example of this, with the APP fraud regulation, banks are now having to foot the bill. So they're having to now refund the sending bank, so essentially the victim's bank, and the receiving bank, which is often not the criminal's bank, it's usually a money mill account, are having to split the cost of that fraud 50-50 when it's done by bank transfer. So all of the fraud that we've got recorded and the financial kind of implications that we know are now being absorbed and paid for by the financial institution itself. Fraud prevention, preventing that bill at the end, preventing those APP frauds, actually goes from a profit and loss issue, or maybe even a customer complaints issue on your balance sheet, and it goes to a competitive advantage, because the more of that you prevent, the more you're able to keep hold of the profit in the company, in the financial institution. So I think we're going to see more of this type of regulatory procedure, that we're going to see more consumer protections put in with financial services paying the bill. I think the UK has just kind of started that trend. We've obviously already seen it in things like chargebacks and the protections around credit cards, but obviously there used to be and has traditionally been charges on those credit cards to be able to pay that money back. Whereas now we're seeing this on free to use current accounts. The money's got to come from somewhere, so keeping hold of that is going to be a competitive advantage. when you design your products, they need to have embedded fraud prevention mechanisms akin to cybersecurity features. So if you're doing in a fintech, for example, fraud prevention needs to be by design in your product. The things that we've done when we've been doing product testing is we've been able to open fintech accounts without any ID because there's been a fundamental failure in the KYC procedures at the design stage of the app. So that when the regulatory stack, so when the move to send it to biometrics was supposed to happen, something has gone wrong in that process and they didn't ask us for ID. Now we were just doing a test through the eyes of a criminal in that perspective. So that wouldn't have ever flagged from on a regulatory side unless there'd been a sudden spike in loads of high risk onboards. But what we were able to see was that there was a design flaw in that particular fintech's stack when they were doing the KYC on on their app essentially. So if they'd taken a fraud prevention approach by design at the design level before going out to customers, that would have been picked up. But they had high levels of cybersecurity, but not high levels of fraud prevention considered in the design. So it needs to go right into your product design, whatever that product may be. And then most crucially is people. And that's because as we get ever increasing, more sophisticated technologies, people are becoming the weakest link. And we could say that they probably have always been the weakest link, but actually although we've got loads of technology now that we can use to detect, the criminals have also got loads of technology that's open source that they're able to utilize to make them smarter and harder as well. It's harder for them to use those technologies against the institution's technologies. The kind of battle of the technology doesn't really mean that the criminal comes off better. However, when those technologies are aimed towards people, that's where criminals can really make a difference. So we need to educate and empower both our staff and our customers as the first line of defence. They can be our biggest weakness, but they can also be our human firewall in the fight against financial crime. So we need to upskill people and really invest in the people element in the same way that we invest in best products and people. These need to be equally weighted, which is why they're pillars of prevention, is that when we've got fraud prevention by design in all of those areas, we're going to be much stronger. Now, this is about more than money. There's a hidden harm when it comes to fraud and financial crime, and this is the rise of AI-driven scams. So looking forward in how we're going to navigate this for the future is that we can see that criminals are leveraging AI to deepfake avatars. This leads to really sophisticated frauds. So for example, there's a global sextortion ring that was dismantled in 2024, which exploited online platforms to target teenagers, and it resulted in suicide. The kind of output or the end result of fraud and financial crime, we can often get lost in the money. We can get lost in thinking how does this impact, is it funding terrorism? Are we uncollected taxes? What is it driving illegal economies? But there's a real human element to this in terms of things like mental health and the impact on our society as a whole. How we can future-proof around anti-money laundering then. So some of the technologies that we are seeing that are becoming an issue is around things like cryptocurrency exploitation. We can see from a regulatory point of view, things like the case study on TD Bank, where it had a £3 billion settlement because it had almost, ruled as deliberate failures in regulatory compliance, seeing that one client had over £1 billion worth of currency go through from cryptocurrency when the client itself on paper is only worth 1 million, kind of showed that actually cryptocurrency is becoming one of the bigger challenges that we need to face. And I think that's only going to get worse as we see things like more sophisticated blockchain and essentially we see currencies develop into I guess units of power that we haven't adequately regulated for, or we haven't adequately had legal responses into. So the problems we've got coming for us then: technological advancements, as I've already said. We've got AI and machine learning that are becoming integral in detecting and preventing financial crimes, but are also being used against us. We've got regulatory evolution. The UK's extension of corporate criminal liability has meant that criminal offences reflect a global trend towards stricter compliance requirements. Are we going to see APP fraud regulation duplicated across the globe? I think that's a question mark at the moment, but the trend that has happened in the past is that what happens in the UK does tend to get rolled out elsewhere. Do I think that's necessarily a good thing? Well, what it tells me from other forms of social policy is that it usually isn't, is that we should look at what's happening and what works in other sectors with a critical eye before we roll it out anywhere else. Public-private partnerships are going to be crucial, not just on a local level and not just on a national level, but across nation states as well. We need to encourage collaboration from regulators, financial institutions, technology providers, including things like Meta, social media. We all have to work together, otherwise we are completely going to be on the back foot. One of the things we desperately need to deal with on an international level is information sharing. Not only do we need to promote cross-border data exchange to track and prevent transnational crimes, we need to legislate for it. We need to give our financial services and our legal teams and our police and others who are tasked with dealing with this, we need to give them the tools, both from a regulation and a legal point of view, to be able to deal with it. So our call to action in all of this then, and the thoughts that I guess that I'll leave you with, is that there is a necessity to have culturally contextual policy. We have to embed fraud prevention into our processes and our policies.
+234 915 3414 314. Let us help you solve your Christmas challenge. For your own business, work in a private establishment or work in government agency, FinCrime Institute is here for you. Our experienced trainers provide quality and evidence-based training in clearing governance, risk and compliance, financial crime prevention, and leadership training focused on cultivating the right attitude and skills in your teams. Our trainers have hands-on, so you get the knowledge and skills you need to succeed in your career. Trainings include enterprise risk management principles, best practices in operational risk management, cybersecurity risk management, and lots more. Contact us today. Phone 01700 or 0915-3414-313. Send an email to inquiries@pmcinstitute.com. We are the ones you need. A lot of people use the word excellence. We are not just a ink and paper. We are the duty to excel for business cards, magazines, and others, brochures, everything in IT and beyond. We make your communication stand out. We are committed to your project. The only thing we don't bring is money. We are time trained. Bring the cost today. Speeds, next generation speeds, next generation speeds, screen analyzes the screen diagnosis to identify fraud, to identify chargeback rates, say rates, where are you facing earning discrimination, the related authorization, detection rates and case readers, customer satisfaction, which identifies the probability please feel free to contact us. Feel free to all of our solutions.
Okay, now that we're back after our very short commercial break, I'd like to invite our fifth and final keynote speaker, Dr. Blaise Ijebour. He will be presenting on future-proofing GRC and financial crime prevention, regulatory perspectives on AI, ESG, and digital compliance in a rapidly evolving landscape. This is sort of a follow-up to Dr. Ezekiel Oseni's presentation, which was very similar, but Dr. Blaise Ijebour is going to build on those thoughts, and then we'll have about half an hour for a panel discussion. So, Dr. Ijebour, the stage is all yours.
Good afternoon. I guess you can hear me properly?
Yes.
Okay, can you share my slides or can I share it here? You give me permission to share it?
Yours.
Perfect. Okay, all right, great. So, good morning, good afternoon, good evening, well, it depends on where you are today, distinguished colleagues, partners, and friends. It is a privilege to be here today to kind of talk to you and have a kind of a conversation, even though most of it will be one way, um, about because I'm coming to you not just as a central banker or a risk manager, but really as a fellow steward of the trust of our financial system. Um, and I think we are gathered today at a really profound crossroad where we are seeing significant transformation due to the convergence of artificial intelligence, ESG imperatives, and digital innovation that is shaping the fabric of governance, risk management, and compliance, which is what we call GRC. Alongside this reality, we are also seeing cybercrime escalating. Today, I've been given the almost impossible topic to talk on, which is future-proofing GRC and combating financial crime in a rapidly evolving digital landscape, regulatory imperatives on AI, ESG, and digital compliance in a rapidly evolving landscape. When I saw that topic, my first thought was that whoever wrote this topic wanted to make sure I speak on everything under the sun and just a bit under the moon also in the 15 minutes I have. Next slide. What I've decided to do is use the next slide, please. Or yeah, is to use the 15 minutes I have to kind of touch on no the previous one, the agenda, yeah. To talk a bit about what's the cybercrime crisis it looks like, the impact of cybercrime other than the financial. Take a quick look at what's behind the surge, and the role of AI in all of this, what of ESG, digital onboarding and financial inclusion, how they're affecting the landscape, and then cast a vision for the future and my concluding thoughts. Next slide. So this slide just next slide is this slide just shows in a very in a high level way what the elephant in the room really is, which is cybercrime. Estimates are that criminals are making about $1.5 trillion every year. That's a lot of money. That's the size of some major economies in the world, and it is significant. The other statistics are there. The estimate is that it will be costing companies and organizations about 10.5 trillion with a T every year by 2025. So we are, next slide, we are really going through a massive crisis. And the impact of cybercrime is not only financial. Very often we focus on the financial because it's easy to see, but it's also systemic in the fact that it can bring organizations down. It can, not just because they don't have money, but because their reputation is so damaged that nobody wants to do business with them anymore, or because they've their system is so damaged they can't keep up anymore. So cybercrime is not only financial, it also erodes trust in digital banking. It disrupts payment system and undermines financial inclusion, especially for our most vulnerable people. I know people within the Nigerian space that would never touch their bank cards because when they first came out, they were defrauded, they lost money, and today they completely stay away from any digital payment. They rather go cash their money from our relatives in the villages and aunties who have little money, but they're devastated by the fraud. They want to get involved payment systems at all. Growing involvement of organized crime and syndicates, and in some cases, nation states in pushing cybercrime and making it more successful. I'm so lucky. I'm speaking right after the lady from we fight fraud. I think that I'm correct if in that, and she's gone through a lot of these details, so I'll be able to just gloss through a lot of them. But just provide to say that with organized crime coming in and given the huge amount of money that is involved in cybercrime today, they're able to launch massive attacks, and they're able to take time to understand different systems and tailor-made their frauds to suit the cultural and the beliefs of people and make them more acceptable and more readily sold to people and more readily able to catch people. The other thing that we are seeing is that there is low cybersecurity maturity across institutions. A lot of institutions are playing catch up with us on cybersecurity. Basic things like just doing your penetration testing and making sure that you are checking your vulnerability do your vulnerability assessment and closing your vulnerability. A lot of institutions are still lagging behind in those basic things, and that's exposing them and the whole system to cybercrime. There's also fragmented regulation. And I think the lady who spoke before me spoke very eloquently about this, so I won't need to spend too much time. But suffice it to say that regulations are usually very siloed and they are defined by national boundaries. However, these criminals operate across national boundaries, and they make it very difficult for enforcement to be full. There's also weak interagency coordination. Another thing we are seeing is cryptocurrency, which operates across boundaries, across borders, and it's much more difficult to regulate. So a lot of the fraud we are seeing, especially across Africa, the money flows from the payment system very quickly and very rapidly into cryptocurrency, and it's very difficult from that point to begin to continue to trace them. There's also a shortage of skilled cybersecurity professionals and limited education of financial system users, and that I think the lady also spoke about that. But I think it's important to just reiterate the point that indeed our users, our employees, are the first line of defense. What we're also seeing is AI-powered fraud. And this is very interesting because one of the key things we used to look at before was a lot of time when you get a fraud email, there will be it will be written in a very awkward way, it will not be clear. But with AI, their emails are going to that are very make you think that, oh, this is the person who I'm talking to, and then the voice cloning and all of that makes it easy for them to succeed with their crime, with their cyber crimes. Next slide. All of these different different factors is actually promoting the growth of cybercrime as we see it today. But AI, and like all of the things that you asked me to speak on, are double-edged swords. They have two sides of them. Why AI is well in the background, it also gives us a tool to fight cyber financial crime. You know, using machine learning models and all of that, we're able to flag suspicious transactions and anomalies in our transactions very quickly. In looking at massive numbers of transactions and picking out what are anomalies, what don't look right, and what looks like fraud, and addressing them. This is a great game changer that AI bringing to the table. Some of this analysis would take human analysis maybe days to figure out, but with AI we can do them very quickly, almost at real time. And in Nigeria, we're looking at some fintechs are already using that. The Central Bank of Nigeria is looking at options around using this kind of technology to understand transactions and to kind of identify fraudulent transactions in real time. In South Africa, banks are also deploying natural language processing to monitor insider threats. Next slide. So with all of this, AI is helping out as much as it is a problem, it is a challenge. But AI is not a silver bullet. It's not going to solve all the problems. As it is trying to solve some problems, it's also creating other risks. So risk around bias in algorithm can lead to unfair outcomes. So if the algorithms are not written properly, what you end up picking out as a fraudulent transaction might not really be fraudulent transaction. They might just be outliers, unusual transactions here, but but they are genuine transactions all the same. So it's also lack of explainability, make regulatory oversight difficult. So how do we really check that what you are using is correct, makes sense, or is working right? There are also data privacy concerns. Please back. I'm not finished that slide. Previous slide. Previous slide, please. Okay, thank you. As regulators, we're always working to strike a balance. And one of the key things that most regulators are looking, if they have not done so already, is how to have an AI governance framework. Next slide. ESG is the next thing that is the major issue. Next slide, please. ESG, next slide, yeah. ESG is no longer just a nice to have, it's becoming a regulatory imperative. The Central Bank of Nigeria in 2012 put out what our ESG goals and principles are, and there were 9 principles in those things. And since then, we've seen complementary regulation from SEC and from Ministry of Environment. Also, recently, the FRC has said they're going to go into the IFRS sustainability disclosure standards that all companies need to meet up. Next slide. So ESG, next slide. ESG and integrity of non-financial data is also a challenge that we are seeing across Africa and across the banking system. Particularly where you see people begin to do greenwashing, which they are declaring things that they don't really do, and that's a risk that is arising from ESG requirements. And because of that, we are beginning to develop things like RegTech to kind of respond to this, which is AI-powered platform for compliance. And many of you would have known, we recently launched our compliance department, and they are looking at using different platforms and different tools to monitor compliance across the banking space. Next slide. Next slide, please. The next major question is about digital onboarding and financial inclusion. Digital onboarding essentially is a space where people are able to be onboarded, KYC done on the digital platform to make it easier for us to financially include as many people as possible. However, as this is expanding financial inclusion, is also creating risks. And this risk we've seen in many different ways. We've seen people who literally fake other people's identity because West African banks had a major incident in the last few years. As regulators, we must evolve so that we are able to supervise technology, have our own supervisory technology to monitor compliance in real time, test innovation safely, and have cross-border collaboration to harmonize standards. Next slide, please. So, a vision for the future, essentially what the regulatory priorities I think we should be focusing on as regulators is to modernize our supervisory frameworks to reflect digital realities. The world is changing, our supervision has to change. We cannot rely on yesterday's supervisory mechanism to regulate today's financial landscape. So we need to always continually invest in our capacities, especially AI, cybersecurity, and ESG analytics. And then we need to foster public-private partnership, co-create solutions, because the solutions that will work are the solutions that we have all the pillars of defense and all the lines of defense lined up together, working together to frustrate the activities of our cyber criminals, because they are working together and they are collaborating. If we don't work together, if we don't collaborate, they will always find a gap to use to exploit the financial system and to the detriment of all of us. We need to champion data harmonization across Africa's jurisdiction, and that will help significantly to reduce the silo challenges we are finding across the different jurisdictions and the ability to trace transactions across jurisdiction. And above all, we need to push for an organization and the central banks to embed ethics, resilience into every layer of our financial system, so that when we have those ethical systems embedded, we'll have less insider threats. We'll have also resilience and ability to forestall the criminal attack. In conclusion, next slide. Next slide. Next slide, please. All right, thank you. In conclusion, let me end with this. The future of GRC is not just about compliance, it's about trust. Trust in our institution, trust in our data, trust in our ability to adapt. Africa has a unique opportunity not just to catch up, but to lead, to build regulatory systems that are agile, inclusive, and future-ready. Let's see that opportunity together. Thank you very much.
Thank you very much, Dr. Ijawar. Again, plenty of food for thought. So hope there's plenty of lessons learned there and best practices that people can carry with them back to the office. So now we're going to have about half an hour panel discussion. We have 5 questions here that have been prepared ahead of time that we will discuss both with the 4 panelists that have joined us today, as well as with some of the additional panelists. That I'm going to focus on those people that haven't spoken already to give them an opportunity to speak, and then if there's anything else that needs to be added from some of the main keynote speakers, then we can go ahead. Again, we're short for time. We have 5 questions, so I mean, I'm going to try to keep this as concise as possible. So let's get started. The first question has to do with AI, ethics, and accountability, and who's in control. And basically, this question says, you know, organizations across varying sectors, deploy AI and automation for decision making. How do we ensure ethical oversight? And who is ultimately accountable when automated systems cause harm, bias, or regulatory breaches?
Sorry.
So let's get started. Abdul Rahman Akanbi, I know you're part of this panel discussion. It'd be great if you can, turn on your camera and, get us started with a brief discussion on that question.
Yeah, thank you. Thank you very much. Then I've just turned up my camera now. Thank you for the opportunity. So I'll just get straight to the point because I'm sure I'm very, very conscious of time. And we've been here listening to very interesting conversations. And thank you. I think the last speaker actually hit on some of the information about the risk of, the from a financial crime perspective in regards to AI ethics and accountability. And then we're in particularly, biased, AI being biased in its own logic and decision making. So I'll say, let me give a concrete example of where that comes in here. So one is a major bank, once deployed an AI system to detect money laundering. And this model was trained on historical data. So normally you need to train this data, the AI, to be able to detect future, risk. Unfortunately, it reflected existing human bias in that, and it began disproportionately flagging transactions linked to customers from certain regions and minority groups. So, not based on actual risk, but on patterns it had learned from this fraud data, historical data we pointed out. So, and this led to unjust account closure, reputational damage, and regulatory scrutiny. Worst case was customers had no clear recourse, the AI logic was opaque, and not even the developers could explain what was going on. Because, as we know, the AI decision making is closed, it's the black box decision making. So now, the question is, who is responsible for this? So all this has happened. people, a lot of things have gone wrong. So who is responsible? Is it the engineer who built the model? Is it the compliance officer who deployed it? Or the board that approved it? Now, if we're looking at that, the answer, right, normally I take this to the audience we have a conversation, but I know there's a panel. The answer is the organization must own that responsibility. No matter how sophisticated AI becomes, ethical oversight and accountability must remain human. So we emphasize, we within our organization, we're a cybersecurity organization, Cycom Integrated Solutions. So we normally look at it we believe in human in the loop. So no matter what, especially in a high-stake area like financial crime, no critical decisions like freezing an account should happen without human review. So we also advocate for three things. So three core ones: transparent model, that's transparent AI model that are explainable, right? Regular bias audits and clear internal accountability framework. And ultimately, we should look at AI should support decision making, not replace accountability, because because when harm happens, someone must answer for it. And this can be a machine. So thank you very much. I think that's my response to this.
Thank you, Abdul Rahman. Temitope Yusuf, I don't know if you're with us. I don't think I've seen your name on the list, but if you are, I mean, feel free to jump in and provide any feedback. Otherwise, Thomas, Wan CK, or Dr. Ijebor, if you have any comments on what Abdul Rahman has been saying in terms of this subject. Otherwise, we can move on to our next question. So any further comment from the panelists? Thomas?
All right, Matthew, thank you very much. Just to share a couple of slides that I have, and of course, a couple of takeaways as well, all right? Okay, now, so, okay, to begin with, okay, let me pull up my slides, by the way, first, all right? Okay,
we only have a few minutes, Thomas, so
sure.
Just keep this in mind, please.
Sure. To get things started, I wonder if all of you here in the audience, have you watched the movie called I, Robot by Will Smith? Okay, now it's a very interesting movie where it kind of depicts the future whereby AI-driven robots coexist with humans, and they have come to a stage whereby they actually can display emotions and think on their own, and sometimes overriding the very rules that mankind we have set for all these AI algorithms and robots. All right. Okay. Now, so on that note, just like what the first speaker has mentioned, you realize that trust is very, very important, right? Okay. Now, so how can we give trust? You realize that well, it's consists of several components we need to consider. At the top would of course be AI ethical values. All right. Okay. Now the rest, regulations, accountability structure, your policies, procedure, that's a given. So I won't really go in depth. Now, so here, just to share from Singapore, where I come from. Now, in fact, Singapore, the government as well as the regulator, we are the first in the world to come up with this model AI governance framework. All right, and as you can see here, it consists of 4 key pillars, and relying on the 5 guiding principles of explainability, transparency, fairness, human-centric, safety and well-being, and so on. Okay, but you also realize on my slide I have actually highlighted in yellow 2 important points here. The first one is what we call the FIT principles, in short, and the second is that on explainability, just like the first speaker has said. Right? Okay, now, so here in the next slide, I have some illustration as to how the FIT principle. Okay, FIT actually stands for fairness, ethical, accountability, and transparency. Okay, now so I think it's a very useful set of principle for any organization who's trying to adopt AI. All right. Now, so senior management by going through this principle, hopefully we can come up with something which fair for everyone, safe and not harmful, as well as being able to show transparency, accountability, and so on. Okay. Now, so yeah, we can actually make use of these FIT principles to help us to analyze whether certain AI adoption is it worth the while and so on. All right. Now, on the part of accountability, just to share some developments here in Singapore as well. So the DBS, Development Bank of Singapore, is the largest owned government bank in Singapore. Now, so they were quick off the block to adopt AI. And you also realize for things to happen, very often we need to have what we call tone at the top. Now, so okay, you can actually look up this structure, corporate governance structure for AI, which DBS Bank has actually adopted. Now, so you realize that this will give rise to new roles, perhaps, right? Like for example, we got a chief AI ethics officer, we got a chief data officer. Apart from the usual compliance officer, chief risk officer, etc. Okay. Now, you also over respective committees, like for example the AI ethics use committee, and also a committee that overlooks some of those rules, right, and modeling work, okay, to sort of approve whether the AI model is suitable for deployment and so on. Now, so okay, long and short, good things happen by beginning at the top. So do you have the right structure? Now, and then, the next key point would be that on explainability. Now, there are many ways to sort of explain about the output decision of AI models. Like, for instance, the Shapley method. Okay, all right. Now, so many of these, even some of those like over here, counterfactual methods, decision tree, ICE, and so on. Okay, I won't really go into details. These are rather technical. But at a class of things, with the output, always remember, AI is nothing but a computer algorithm, to be honest. Where you put in data, it will give you an output decision. Okay, now, but what sort of enables the outcomes or output decision to be reliable? Now, so we can make predictability methods to do so. All right. Now, so long as we're able to explain, because AI, to a lot of people, it is like a black box. We do not know what happens inside the algorithm. All right. Now, so we can, if you try to convince your stakeholders, try to make use of these explanatory methods to explain your outputs and the decision that's been shown up by the algo. Okay, Matthew, that's all from me. Thank you very much.
Thank you, Thomas. And let's move on to the second question. The second one has to do with ESG integrity or corporate PR. And the question is basically, has ESG become a strategic driver of sustainable governance, or is it at risk of being reduced to a marketing tool? And how can organizations in all sectors avoid greenwashing and prove a real impact? I see that Perian Abdegali is here. Please take the stage and provide us with your input into that.
Thanks, Matthew. Thanks for giving me the floor. Quickly, my 18 years of experience and PhD degree focused on corruption and sustainability of business ecosystems around mainly in emerging markets, but definitely I can step in talking a little bit about developed markets. So being precise and to the point, in the recent years, the ESG has evolved to become a central pillar of strategic governance. So it's moving from becoming a marketing tool or imaging or reputational positioning to a key driver for business stability and profit. So it's no longer perceived in emerging or on the developed markets as a marketing tool. It is becoming crucial for emerging markets because it helps in creating new streams of income and job opportunities. However, it lacks a purpose-driven leadership. So I can see that on the top of organizations, whether banks or non-banks, ESG is not empowered enough. So it still comes from the grassroots, the civil society, who are being impacted by the lack of ESG. They are advocating the top management and the government and city councils to derive the change, because they're the most groups that are being impacted. So I think the ESG is becoming crucial, and it is important to include it in the core business strategy and the governance structures and the performance matrices, not just for companies, but also to trickle down the effect of the ESG on all stakeholders. So the solution lies in three key imperatives. The first one is to get over the slogans and move to the proper implementation, providing a clear framework with KPIs. And second is a governance-led integration, is to be, for the ESG, not just to be, again, theoretical on paper part of the strategy, but also to be governed by cross-functional committees across the organization, and to be monitored and publicly disclosed, like reporting. The third is the verification and traceability, to avoid greenwashing, to involve third party, not necessarily to be audits, big audit firms, because from what we have seen around the world, that sometimes audit firms are corrupt. I'm not definitely generalizing, but some of them are corrupt. But we need to let the most negatively affected groups to step in and have a say by engaging the civil societies, small and medium enterprises, because ESG must shift from just a narrative tool to a strategic enabler of resilience and trust and long-term value for all stakeholders. Thank you.
Thank you, Perian. Eddie de Jong, any comments from your side of things? Any reflections based on what Perian has shared, or on a question?
Yes, I think that Perian has been right on the money in terms of how ESG is evolving. So going from PR gimmick to actual influencing the way we do things. If I use Nigeria as an example, the awareness is increasing. The regulators have come to the party. If I speak for my industry, in particular the pension industry, we're now seeing the regulator bring out draft guidelines on sustainable investment principle operators. And so if we want for ESG to have the impact that it's meant to have, and just like she mentioned, we have to be able to measure what is being done in this regard. We have to be able to transparently measure, so that it doesn't become it doesn't default to a marketing tool. If you're not able to correctly see, transparently see how it tracks through the decision making of an organization and impacts the investments, the output of that organization, then that would just be paying lip service to the principles. So unless we're able to do that, then we're not actually going to derive the long-term benefits of ESG to the environment, to the society, and to the organization itself. So those would be my thoughts on the subject, and I am totally in agreement with Perian.
Excellent. Thank you for that, Eddie de Jong. Let's move on to the next question. This one is on financial crime in the non-financial sectors, the blind spot. And the question basically says, as financial crime risks expand beyond banks to industry like real estate, tech, healthcare, and extractives, are non-financial sectors prepared for the rising regulatory spotlight? Perian, you want to lead that there too? Unless Benedicta Onanunga is here too. I didn't see her on the list, but.
Well, I can add a few points.
Oh, you're here. Okay.
I'm
Okay,
here.
she
I'm
can
just
start
here,
and
Lara.
Benedicta, please get started, and then Perian can comment. I'm trying to spread the love.
That's all right. We love your love.
You left me out, Matthew. I had some comments to make, you know.
Okay, sorry, Patson. Jump in for the ESG, and then we'll jump into Benedicta. I had you marked down for question 5, but go ahead, please.
Okay, I should go ahead.
Go ahead about the ESG. Yes.
Okay, I just want to add to what Edidion said, particularly from the Nigerian and African perspective. You know, today when you turn on your TV, it's awash with expensive adverts of companies showcasing their social intervention efforts. You know, in their work. But please don't get me wrong. I'm not saying that it is not good. It's good to advertise, but I can tell you that. Their main target is advert to sell products or to push their brands. Whereas those same companies can't show equivalent expenditure for the ESG aspects, you know, like the environment and governance. Take, for example, my career as a chief compliance officer, we see these things. As a chief compliance officer, you could be struggling to get a budget for an ethics or anti-corruption training. Meanwhile, same company can spend twice that amount of that kind of budget to fund a concert, to showcase a donation ceremony for maybe a fashion or a food show, you know, to donate to charity. I mean, that's, you know, in my extensive experience, particularly in Nigeria, I observed a concerning trend, you know, and this disproportionate emphasis on the social side of ESG. You know, many organizations equate ESG as corporate philanthropy, you know, donations, community projects, and things like that. So while this is a good effort, don't get me wrong, they often overshadow the equally important environmental and the governance aspects. You know, this is probably, you know, this is what we call greenwashing, and for me, greenwashing is like a crime. You know, and for instance, you know, Tisco Consulting recently that 70% of African institutions actually have invested in integrating ESG, just like Edicon said, you know, into their investment decisions, you know, especially in sectors like banking, energy, mining, and agriculture. Yet, despite this, you know, investment seems to emphasize, you know, like in Nigeria, many companies continue to focus primarily on the social side. You know, so this is superficial approach, you know, and it excavates the issue around a regulatory gap, like the doctor from CBS, my colleague said earlier on, you know, so it creates a kind of, you know, regulatory gap also. In Nigeria, we have tried to adopt some sustainability standards, you know, and the Financial Reporting Council has also intervened, you know, some way, you know, but we want to address this greenwashing thing and ensure that companies encourage proper embedment of sustainable practices in operations, you know. So to close this gap, I will suggest that to focus a lot more on the benefits of you know, intervening in the entire ecosystem of the of the environment and governance. You know, the entire embedding the entire stewardship requirements, you know, to drive and to drive sustainability, not just a tick box. You know, so in conclusion, authentic ESG implementation requires moving beyond just surface level social initiatives, but to, you know, embrace the entire comprehensive environmental and governance practices. Thank you.
Thank you, Patson. Now going back to, we wrapped up question 2 very nicely with Patterson's comments. Now going back to the third question that we have here, which I'll repeat it just to sort of situate ourselves. So as financial crimes risk expand beyond banks to industries like real estate, tech, healthcare, and extractives, are non-financial sectors prepared for the rising regulatory spotlight? Benedicta, I know you're here, so please, the stage is yours.
Right, okay. Thank you very much. Thanks for having me. I would like to say that financial crime risk has always been within the non-financial sector. It's not like something that is just expanding there. It's just now that the regulators are putting spotlight there to see how banks or how the financial service sector can address the risk in the area. I mean, bearing in mind that this is where all the money are coming from. And when you talk about the non-financial sectors, you're talking about real estate, legal, and accounting, construction, oil and gas, gambling, and all that. So they've always been part of the financial crime risk. Is how we can harness controls in those sectors to ensure that the banks are not left to pick up the pieces, because what we have is that all the financial crime risks coming from those sectors are being addressed at the bank or by the financial sectors. They are asked to do the due diligence, they are asked to do the source of wealth, source of funds, where the funds are coming from. Whereas if regulations had had been implemented at the grassroots, which is in these sectors, all these things would have been picked up before they get to the bank. So they are already there. The risk is there, they've been part of it, but how can they address it? And one of the things I put down here is that there has to be regulatory interactions. I know that financial sectors are more regulated and controlled under surveillance than all these other sectors. I'm not sure the kind of regulation that guides the construction sector, the insurance sector. So insurance is even partly accounted, but legal, how are they regulated? In what are the kind of requirements that they have for them to check the identity, the address, to check the source of funds of transactions passing through retail? For instance, anyone can walk into a retail shop and bring a large cash and buy something and walk out. Who is checking the source of that fund? So that's what needs to be addressed. And I think that these are things that have to be addressed from the top. There has to be some regulatory interaction between financial services regulators and the regulators in those areas where they are required to conduct some level of due diligence for their activities.
Yeah. Okay, thank you, Benedicta. Perian, I know you have to leave. Do you have some final comments on this question? And then we'll move on to the next one. Just to give you one last chance to speak before you have to leave.
Yeah, thank you so much. Well, I just have a quick note that the evolving nature of financial crime and money laundering made it clear that banks are no longer the sole front actors in this matter, and other industries will have to seriously step in and take mature steps to deal with financial crime, and regulators are tuning their attention to non-financial sectors finally, such as real estate and technology and healthcare and extractive industries. Emerging also from ESG, because with ESG, corruption is involved in heavy carbon industries and bribing to avoid the decarbonization strategies. So the financial sector has been suffering with other sectors as being their corporate clientele, trying to convince them that it is not a luxury anymore, and one day you will wake up and realize that you can't eat money. Unfortunately, we have to take it seriously that this is our lives, environment, and our society. So to meet the regulatory expectations and avoid the legal fallout, I think the non-financial sectors will have to follow 3 points, which embedding the financial crime compliance into the corporate governance, not just as a legal risk, but more of an ethical business conduct. And then second is to adopt across sectoral standards like ISO 37001 for anti-bribery, ESG aligned due diligence frameworks. And the last thing is to invest in a system and in training and internal controls to detect the suspicious activities, especially in high-risk transaction jurisdictions. And thank you so much.
Thank you, Perian. And now moving on to the 4th question. I'm going to try to wrap everything up. I know we're running a little late, but I'm going to try to wrap up everything by 4:30, hopefully at the latest, just to give us an extra 20 minutes for these last 2 questions and then some parting remarks. The next question is about culture versus compliance, bridging the gap. So the question reads, across industries, how can we move from reactive compliance to a proactive culture of ethics and integrity, especially when leadership is disconnected from operational realities? Is Pietro Odoriso here with us? I'd like to give him a chance to speak. Otherwise, Lara Onaruga, you can take over. Is Pietro here? Lara, feel free to, tackle this question as well.
Yeah, I think to address this question, we need to understand what culture is and what how this impacts compliance. Now, culture is the value belief and how things are done in different organizations, which could vary between, I mean, from one jurisdiction to another. There are jurisdictions that are very free in the way they do things, and then regulatory requirements is trying to catch up with culture. However, what we need to do is how do we match culture with regulatory requirement? Now, if we say we want to move from reactive compliance to proactive compliance, that means that every organization, irrespective of their jurisdiction, need to embed regulatory requirement as part of culture. Now, cultural behavior or activities needs to show that there is deep understanding of regulatory requirement, which should flow from top to bottom, bottom to top. Everyone in the organization should be singing the same tune in terms of knowing what we need to do, knowing how we need to do things. Policies, procedures, and processes have to flow with regulatory requirements being part of that, underpinning everything that we do in the organization. And also there has to be a reality check between leadership and their knowledge of regulatory requirements, because leadership needs to lead. Leadership is where cultural behavior stems from. Now, leadership needs to show deep knowledge of regulatory requirement and support for regulatory requirement and compliance. There has to be a shift in obeying the rule into actually being part of the rule. It's not about obeying in a rigid, it's not the spirit of the latter rather than just reading it. So it has to be part of what people do, and there has to be a lot of training, there has to be a lot of awareness program, and there has to be an engagement with everyone, every stakeholder at every stage. There has to be some form of training to say, well, if we don't meet regulatory requirements, this organization might not be an ongoing thing, might not be a going concern. Regulatory requirements underpin even profitability, because there's a lot of organizations and sectors where profit drives everything. Until we bring regulatory requirements and compliance into profitability, processes, behavior within the organization, and then we have something that is how do we enforce regulatory requirement? There has to be an enforcement drive at every level. There has to be a control. Somebody has to keep an eye on regulatory requirement and constantly reminding everyone in any organization that this is what the regulation says, this is who we are. In fact, regulatory requirement should reflect who we are as an organization, not just do things anyhow. So that's where I will start from. I can come in later after if somebody else has spoken.
Thank you, Lara. Dr. Ijebor, do you have any, just to give you a chance to speak now too, do you have any comments on the question? Otherwise, Thomas, you want to give us a very, very quick sort of comment from your side of things, and I'll move on to question 5.
Sure. Okay. Just to kind of further reinforce what Laura has mentioned. Now, so okay, the purpose of my part, I try to help everyone to see how we can embed, the compliance mindset and culture within organization. Now, so here, just to quickly point out that there's a very useful info paper published by Bank Negara in Malaysia that talks about how implementing all these changes to try to influence behavioral cultural change. Now, for a lot of compliance officer, I think the greatest challenge is about how to influence your stakeholders. Now, so they look at it from they took a two-pronged kind of approach to look at things. First, focusing on the individuals, and then the context of the environment. In other words, the environment in the firm which individuals are actually working in. All right. Okay. Now, so here, you find that things like ethical
tailored compliance strategies to meet the market specifications. So to navigate this issue of fragmented landscape, businesses must therefore adopt flexible ESG frameworks that can adapt to varying regulatory requirements. There's need for collaboration between the regulators to harmonize the standards, which is also very crucial. Initiatives like the African Continental Free Trade Area is one particular touch point where I think we can actually meet and resolve this fragmentation. Also coming up is the African Association of Compliance Professionals in Financial Services, which is in the works, which I'm also leading right now, actually working with African Development Bank. We're trying to an African association that can look into these areas of disparity in regulation, particularly focusing on areas like ESG. They present very good opportunities to help to streamline regulations and foster a more cohesive ESG compliance environment. So in conclusion, addressing the regulatory fragmentation through an harmonized effort is essential to facilitate cross-border operations and ensure a consistent ESG compliance across Africa, and to have the Africa perspective in ESG standards, globally. Thanks.
Sorry, I was muted. Abdul Rahman, do you have a perspective on this question from I guess a cybersecurity point of view?
You did. Thank you very much. You did read my mind. I was going to say it from a cybersecurity point of view. And as we know, regulatory fragmentation is quickly becoming one of the biggest headaches for global organizations. So if you look at areas, especially cybersecurity, AI, financial compliance, these are some really tight bottlenecks that are being looked into. Because if you see, different countries are moving at different speed with different priorities. So, for example, the EU is pushing forward the AI Act, while Nigeria is really, drilling into NDPR. That's
wanted to ask questions during the the session, I think Matthew had mentioned midstream that we could share our questions on the LinkedIn page. Please feel free to do so, and I'm sure your questions will be duly responded to. I think it's also a good time for you to follow the page as well on LinkedIn so that you're kept abreast of all of other programs and initiatives, going on, throughout the year. It's Governance, Risk and Compliance, Financial Crime Awards and Summits. Please search for it on LinkedIn. I'm sure you will not go wrong. 4 pillars for me, I think it was very key: policy, process, product, people, and the overarching governance structure around that. Of course, not underemphasizing the role of the regulator. This is very critical, and I think all panelists and keynote speakers have done, a wonderful job of just speaking comprehensively to this and all that we all need to do to ensure that we keep our organization and our entire ecosystem safe. Thank you, Matthew. You always do an excellent job of steering and guiding and professionally just coordinating all conversations to ensure that we distill, the essence of why we're here. So I think I've done a good job of what I've been called here to do. Thank you very, very much, and enjoy the rest of the day. Thank you. Over to you now, Matthew.
Thank you very much, Esosa. That's it from me. Hope I managed to navigate this in a right way. I tried to balance it as much as possible, given the time constraints, given everything that we had to discuss. But hopefully, there was plenty of information that will be useful to all of you. And I look forward to participating again next year, hopefully. And with that said, very grateful to the Morgans for organizing this event, for the opportunity to be here with you today, and looking forward to next year. So that's goodbye from me, and we'll be in touch.
Thank you, everyone. Thanks for having me.
Thank you.
Thank you for
very
having
much.
me.
Bye.
And cheers, everyone.
Thank you.
Thank you.
Bye, everyone. Thank you for these profound lectures. We'll be awaiting the slides. Thank you.
And the certificates, soft copy of the certificates.
And the certificate, yes. Thank you.
Please, are they going to send to our email addresses for the certificate of participation? Thank you. Yeah, I'm not sure anyone heard me. I'm asking for the certificates, for the certification of this, for partaking on the training, if they are going to send it out to our, various email addresses.
Yes,
Yes,
it's
sir.
going
We're
to
gonna
be
send it to
sent
you.
out to
All right, thank you.
PCC and also